Are we started now?
Ready to go.
Awesome. All right. Well, welcome back to the weekly rebalance with myself, Ethan Dunbar, and we have Nick Cargill with us as well as usual. And just like usual, each week we're going to break down latest market trends and different strategies that we're using and seeing in markets as we work and give you the insights needed to keep portfolio strategies in check and stay ahead of things. So welcome back, Nick, and I'm ready to get going.
Thanks. Yeah, I'm excited to get into it this week.
Yeah, absolutely. So we're going to structure things a little bit differently this week and going forward. Trying to improve upon our presentations here and our conversations. But we're gonna do a couple different sections this week. One, we're going to start with a market update, and then go into our research of the week. And then we've got trivia questions. We've heard feedback from some of our listeners that those are popular. So we got trivia questions like usual, and go through a couple other things this week as well.
Like usual, usually I have the trivia questions.
That's right. That's right. Well, I have trivia questions this week, so
I'm
I'm ready to
glad.
go.
I'm
I'm
glad.
actually prepared. It's funny. Well, should we kick it off with the market update section and kind of just talk markets for a little bit here?
Yeah, let's do it.
Yeah. So lots of volatility recently. The last couple of weeks, in particular, a lot of volatility in a lot of the major parts of the S&P 500, the top market cap names like Nvidia and Apple, Microsoft, Amazon having lots of volatility recently. Has that surprised you at all, Nick?
I think we've been looking for that a lot of this year. Wouldn't you say, especially from the top names, we've kind of been pointing out that maybe the valuations are a little bit extended, that potentially they're susceptible to a little bit more risk, that sort of thing. So in a way, yes, I think we were a little bit early in expecting that potentially. Um,
Yes.
but I think at the higher end of the market, the Mag 7 names, I guess Google is kind of bucking that trend, but those Mag 7 names, I think that's something we've been talking about, looking for a good part of this year, and starting to see that play out, I would say.
Yeah, agreed. Well, and timing the market is nearly impossible. So hard to do so there. But you're right. We have expected that. I think it's good to drop back and take perspective on things briefly here as well and look at the year-to-date numbers and remember that almost regardless of what index or market you track, we've still got really nice gains for this year. We're coming off of a great 2024 and a great 2023. So it's good to remember that perspective and remember even the most poorly performing indices of 2025 are still positive 5, 6, 7%. So we're still in a good place. Really not a lot of complaining that can be done there when you're, really overall done very well for the year.
Definitely, I tend to agree,
So yeah, definitely
especially
something.
recently. Seeing things
Yeah,
kind of catch up that maybe lagged a little bit earlier in the year, specifically thinking about value companies, value indexes that
yeah.
particularly lagged at the beginning of the year, but have seemed to catch up a little bit more here recently.
We're right. And for those that have, that has been one of our recommendations, shifting into 2025, and it continues to be that into the end of 2025 and the beginning of 2026, is we like a focus on value, quality as well, quality and value as a key component of the different types of investments we like at the moment. And yes, on days where the Nasdaq soars and the AI trade gets more and more inflated, those tend to lag. But you see the opposite effect when you have days where that trade comes into question and the top names that are trading at massive valuations, uh, they get traded down, and those other cheaper names, those high quality names, don't have nearly the room to fall that the others uh, are having.
Definitely, definitely.
Yeah.
Much less
Uh,
extended valuations for sure.
yeah. Yeah, exactly. And it's important to remember as investors that different styles, different size of companies, small cap companies versus large cap companies. There's they all have their day in the sun. It's sometimes hard to remember that when you've had so many times when U.S. large cap growth has been at the top of the heap. But it does rotate throughout time. And again, it's one of those things that we think is it's a really good time to take some of those profits from those top large cap growth names and try to look at quality and look at the price that you're paying or owning investments at. So, anyways, all that being said, lots to be happy about as an investor in 2025 and the former two calendar years at 2024 and 2023. Really great performance. Everyone should be very happy. Really, the only asset class for 2025, and this moves us on to some of our research of the week, is the only asset class that has really given up its gains for the year is Bitcoin and a lot of the crypto assets now trading at losses for the year or flat. They're up today as we're recording this, but have really that's the only major asset class that we follow consistently that has now given up its gains for the year.
Yeah, that's been a really interesting one to watch too, especially because it feels like, I mean, in the whole scheme of things, it was relatively recently, but seems like only yesterday we were seeing, 120 for Bitcoin. Um,
Yeah,
Not that long ago, and that kind of unwound very quickly, along with other more concentrated growth names. And we'll get into that later, that sort of thing. But it's been interesting to watch that unwind as quickly as it has.
yeah, absolutely. And our research of the week, a lot of the focus this week was on the relationship between gold and Bitcoin, specifically looking at the real divergence that's occurred so far, or what is now a major divergence this year, where gold is still positive more than 50% year to date, and Bitcoin is now flat or even at losses, depending on when you listen to this. But it really has changed quickly, and we dug into that a little bit this week. What did you find in that research, Nick?
Yeah, there was some interesting dynamics that we were taking a look at there, and I think one of the things to start out with on that front is just the narrative as a whole that's kind of developed more recently, but just also the context of it in the past. And recently, we've seen an uptick in the correlation between gold and Bitcoin as somewhat of they're complements to a debasement trade. So moving away from fiat currency into something that has more restricted supply demand dynamics, where supply is theoretically fixed to some extent. With Bitcoin, it is fixed at some point, but the creation process is defined. It's very rigid. There's no
Right.
altering it. With gold, there's limited supply, that sort of thing. So with this debasement trade that's become more and more popular over the past year, we've kind of seen these two assets move in tandem a little bit more than they have in the past. Because in the past, Bitcoin, while it was referred to as digital gold, it was really seen as a risk on asset, and really just a risk on asset. Potentially a hedge for fiat currency, that sort of thing, but really that was all theoretical. And recently, we've just seen that price dynamic play out in a way that would make it actually seem like it's being treated as a debasement trade. So moving away from fiat currency into something that's more, uh, you know, fixed supply demand constraints. So that's kind of the context for it, because we saw that correlation uptick, and we've seen that divergence here recently, like Ethan was pointing out, where we've got gold up over 50% year to date and Bitcoin down or close to flat.
Yeah, well, and now that wasn't the case, right? Until more recent. So let's dig into that debasement trade a little bit more and expand and explain that a little bit more. So that you're basically saying Bitcoin and gold, the as countries like the United States took on more and more debt. As you take on more and more debt, print more and more money to pay your bills,
Yes.
you are devaluing your currency. That's debasement, right?
Yes. Yes.
So as you debase your currency, assets that have a defined supply. Now we know gold doesn't have a completely defined supply, but there are, I guess there is, if we just did happen to know how much gold is in the earth, right? But it's compared to currencies that
Yes.
are now being printed at will, very defined, and Bitcoin is defined as well. Which, by the way, is one of my trivia questions. Do you know how many Bitcoin are how many Bitcoin are out there?
How many
What's the
Bitcoin?
maximum number of Bitcoins that can ever exist? That's the
Oh
better.
gosh, I don't know that off the top of my head. I know
I believe it.
we hit the constraint at some point because there's the halving event, and right now it's being created, and then at some point we're going to hit a point where there's no more Bitcoin being created and it's truly fixed. I don't know
Right.
what number that's at though.
So 21 million Bitcoin.
Wow.
So, anyways, similar to gold in the sense that both of the, so what you're saying, getting back to your debasement trade, as throughout this year, as that kind of started, we had some scares in the market that uh, debt was getting high, money's being printed, currencies being devalued, and that's been a big boost for gold and Bitcoin. But more recently, Bitcoin has given up a lot of the ground, right?
Yeah, and I think that's the really interesting thing because I wouldn't go as far to say that the debasement trade is over by any means or anything along those lines. I think there's still plenty of people taking positions with that being their reasoning. It just
Yes.
seems like for whatever reason, maybe the risk on nature of Bitcoin is overtaking that debasement trade demand for Bitcoin
Yeah.
in one way or another. But we definitely have seen a break in the more recent pattern that we've seen with Bitcoin and gold's price action.
Right.
And this chart does a decent job of highlighting it. If we take a look at this year, so this is year to date, the performance of gold and Bitcoin, or the
Hmm.
price level of gold and Bitcoin. Now, I do have to use an ETF here to get the daily price of gold in the system that we're using here. So uh, just to be aware that that is just we're using a proxy there. But you can see that recently, basically at the end of October, we saw a huge divergence in the price where gold has continued to go up or held steady at the very least and moved up to some extent, while Bitcoin has pulled back very heavily. And we've seen that at
Right.
a time that kind of lines up with a pullback in major tech names. Nvidia pulling back notably. A lot of those Mag 7 names that are highly valued, that are also considered more of a risk on trade, have also pulled back relatively
Right.
notably. Not as much as Bitcoin, but I think that's notable to highlight the concurrence of those two things going on at the exact same time. Um, so
Yeah.
just taking a look at that, I think the most interesting thing that we see here now, I brought in down at the bottom of this graph here. So over the past few years, the ETF we're using for the gold price started, I think, some point in 2015. So I'm looking back to 2016 and taking a look at the correlation of the price of Bitcoin and the price of this gold ETF that tracks the movement of gold pretty closely.
Right.
And we can see here that the correlation for a long period of time really fluctuated. You know, it went up at some points in time and it really went down, and it was pretty cyclical. Like it was not constant for a long period of time whatsoever, really, at least in the period that we're observing here.
Right.
And what we saw, you know, in 2024, we started to see this level off a little bit more, where the correlation really picked up and held steady for a good period of time at somewhere around zero point 0.6,
Mhm.
around there, which typically when you're taking a look at correlation coefficients, you would consider something to be relatively highly correlated at around zero point 0.6. That's the cutoff, and then zero point 0.4 is somewhat correlated, and then so on and so forth. But
Anything greater than 0.6 would indicate pretty high correlation.
Yes, exactly. And I mean, even above zero point 0.4 would be considered correlated.
Hmm.
Um, but we've seen this really level off here recently. And I think this started to feed into that narrative that Bitcoin was being used as part of the debasement trade because we're
Right.
seeing gold and Bitcoin move so closely together. And actually, that relationship maintained its stability throughout that period of time. So this divergence here, while maybe in the longer history of Bitcoin and gold and how it's performed, maybe not all that surprising, kind of bucking a trend that's been established here recently, that's been discussed at decent length in a number of publications where gold and Bitcoin are moving rather similarly. So I think that was the kind of impetus for us looking into this week because it's kind of bucking that trend that seemed to be establishing itself and gives us a little bit more insight into the nature of these two assets, especially since Bitcoin and the whole scheme of things has not been around all that long.
Right. Yeah. It'll be interesting to see how that relationship changes over time because it's interesting, like Bitcoin, you're right. It oftentimes the correlations when there's a major risk off sell off, like we've seen, the NASDAQ sells off more significantly, and Bitcoin tends to be very highly correlated to the NASDAQ. And the higher the price of the higher the valuation of the NASDAQ, and then the subsequent sell off, the deeper the sell off is, but the higher the correlation is. So, I did a little bit of study on this last week and looking at different levels of the NASDAQ and then what is the correlation of Bitcoin to the NASDAQ at higher and higher valuations. And you find that the correlation rises with the NASDAQ and other tech, just tech stocks and growth names in general, the correlation rises as the valuations peak, indicating that, again, Bitcoin and the NASDAQ are more and more correlated in sell-offs than
Interesting.
and in major up markets. But during volatility phases, that's when Bitcoin is correlated more and more highly to the Nasdaq. And it does get, this last week or two or three, as we've seen this additional volatility, that's when Bitcoin has given up a lot of its gains, has been as AI valuations, NASDAQ stocks, their valuations have been questioned. That's when we've seen the sell-off and you've seen gold stay stable. And it does lend to that narrative of, well, a lot of times the correlations are whatever. Things can be either highly or very not very uncorrelated during particular times, and then all of a sudden it all changes when there's a big sell-off.
Yeah,
All
that's the
assets, for example.
unfortunate thing.
Yeah, that is the
I feel
unfortunate
like
thing in all
everything
this.
is like that. Like fixed income is a great diversifier for equity until it's not, when you
Right,
really
until
want
it's
it
not.
to be.
Yeah. Gold does seem to be one of those that is a fairly, and there's a lot of history with gold, which helps in this study, but it's one of those assets that actually does tend to hold up and not sell off during periods of volatility. And when we're talking about volatility, we're talking about downward volatility, really, in all of this. Nobody cares about upward volatility. Everyone loves that. That's fine. But downward volatility is really you do see a lot of the asset classes that have some type of financial risk are highly correlated when markets sell off. And gold is one of those that doesn't seem to be it does seem to provide a source of stability during those during those times, but Bitcoin does not tend to do that. In fact, it's
Unfortunately.
this asset that sells off the most in a
Yeah,
lot of
that's
cases.
very unfortunate. I guess, and that highlights the importance of stress testing your models, keeping an eye on how correlation upticks in the event of a tail event or a tail risk event, that sort of thing. Keeping an eye on that is definitely important because that established correlation coefficient or whatever the correlation you've established can change very quickly into the negative or in a bad way, or you
Yeah.
increase the correlation when you expect to diversify your exposure.
Absolutely, yeah. Very a perfect example of that in the type of assets that a lot of people think of just traditional stocks and bonds. Look at 2022 is a perfect example. Bonds are the great diversifier, the safety net for a lot of investors. And in 2022, bonds are down as almost as much as stocks, down 15, 16, 17, 18% bond portfolios that we hadn't seen that type of volatility in many, many decades. But again, it's a good reminder to be a student of history because that has actually happened before. But it was a great lesson in all of a sudden when things are looking really bad and markets start to sell off, a lot of assets can get highly correlated. And the correlation between stocks and bonds during 2022 got really high for a lot of the year.
Yeah, yeah, it's
So,
definitely one of those important things to watch.
yes, absolutely. So, anyways, well, that is anything else you had in your research this week, or should we move on to the trivia section?
Well, again, I try to tie my trivia questions. Well, you tied your trivia question to what we were talking about as well. So I have something for my trivia question related to what we were talking about, but we can move into that.
All right, let's do it. Same here. So let's do. How many trivia questions do you have?
I really just have one.
Okay, let's do. I've got a couple. So if let's do yours first,
Okay.
and then I'll pick three of mine. How about that?
Okay. Oh wow, you came prepared.
Well,
All
I
right.
got picked on for the last couple of weeks for not being prepared in the trivia, and now I've got seven. If you want to go through all seven, we'll go through all seven.
All seven. Man, might have to save some of those for next week.
Yes.
I like it though. It's exciting. I'm excited. All right. Let's see here. I'm trying to think of the best way of phrasing this, but what historical context brought about the term debasement? Or I guess where does the term debasement like really come from?
My guess would be going off the gold standard.
Yeah, I mean that is a form of debasement, but it goes back further than that.
Oh, really? Okay. I'm not sure.
Okay, it goes back to Nero in 64 AD.
Oh,
And
wow.
debasement specifically I guess because most of the time their money was, coins made of precious metals, but it was
Yeah.
actually the dilution of the precious metal content in coins.
Okay.
And so as time went on,
Uh,
debasement is used now for moving away from fiat currency, but it was used when we broke from the gold standard and then the
right.
Bretton Woods Agreement, 1971 again. So I guess it's a little bit funny that we still use the term debasement because we're not pegged to any sort of precious metal anymore. It's just
Yeah.
a general distrust of fiat currency. But goes back to Nero in 64 AD when he diluted the silver content of their coins from 100% silver to 90% silver.
Interesting. All right. What did he
And then
did? What
Henry
did
VIII
he
did it as well.
what did he dilute it with? Silver mixed with,
Some other just base metal, just
yeah.
not, nickel or something like that, I guess.
We still use so the same term we're still using, but really it's mixing base metals with precious metals to get more money.
Yes, yes. And here was the interesting thing I found as well. So when Nero did it at 64 AD, went from 100% silver to 90% silver.
Okay.
150 years later, it was 50% silver in these coins. And then at 265 AD, it was only 0.5% of the coin was actually silver.
Interesting. Okay.
So another one of those things where in the past we've moved further and further away from pegging to these precious metals,
Yeah.
and we do have other periods of time to look at for this. But I was surprised it went back that far. Henry VIII did it as well. There's been a number of times throughout history where it's happened, but I think the
Yeah.
main one that's noted is Nero in 64 AD, and he's known
Huh.
for plenty of other horrible things too. So
Yes. Yes. Debasement being one of them. Now we just do it electronically.
yes, exactly. You don't even have to. dilute
Yep.
the silver. You just make up an additional
Just
billion, trillion dollars, whatever you need.
put another zero on that and it's fine.
Exactly.
That's
Exactly.
funny. Oh boy. Well, that does lead in. So for me, Bitcoin was one of those. A lot of the champions of Bitcoin champion it because it's supposedly not able to be debased. So it came after a period of massive debasement. What year was Bitcoin first introduced to the public? Do you know?
Was it 2009?
Yep, that's right. 2009. Exactly right. So, interesting coming right off the heels of the financial crisis,
Yeah.
introduced an asset that supposedly cannot be debased. So, very
Yep.
interesting. All right. I have two more questions that I already asked you one of them,
All
but
right.
let's go with two more. They're going to be gold based.
Okay.
So, do you happen to know which country holds the largest official gold reserves in the world?
Oh wow. I mean, I would have guessed the United States, but because you're asking the question, I feel like it's something I wouldn't expect. Uh, I'm gonna say the U.S., but I'm probably gonna be wrong on that.
You're right. No, you're
Okay.
totally right. The United
All
States.
right.
Largest gold reserves in the world.
By how much? I figured it was that was the case, but I don't know.
Yeah, I wasn't sure, and I don't have a list of
Oh,
what
well,
the rankings are. I just know the United States is the top one.
that's what they
Um,
say at least.
yeah, that's what they
I
say at
want to go
least.
count the gold bars.
Let's go count them.
I want to see it.
Yep, that's funny. All right, last trivia question before we break for Thanksgiving.
All right.
Gold is measured in troy ounces. How many grams are in one troy ounce?
Gosh, is it 32?
Oh, that's really close. Really close.
Oh, is it 36?
31.1
Oh,
grams.
all right.
31.1 grams in a troy ounce.
Close enough.
Yep. Lots of gold coverage recently in our
I know.
podcast.
This is an interesting one to cover because you've got so much history there. You can
Yeah,
look back
really.
so far with it.
Yeah. What was that trivia question you asked me a couple weeks ago? The first data point we have for gold, I
Oh
mean, it
yeah, the
goes
gold
back
silver ratio.
thousands of years. Yeah.
Yeah, it actually I think it goes back further. That there's like some more. Um, I guess they're less reputable
Right.
records that go back even further than when I referenced, which I think was the Roman Empire. But going back even further than that, just they're a little bit less confirmed, less noted, that sort of thing. So went with Rome, but
Yeah. Pretty
lots of
awesome to have
interesting
that much data.
topics. Yeah, I know. Lots of interesting topics to cover too, especially recently, just because, I think usually gold is a little bit, I don't want to say overlooked because it's talked about a good amount, especially recently, but I think it definitely has a certain stigma when discussing it in certain contexts for, financial
Right.
um, news.
Agreed. Yes, agreed. Well, we might have some more coming on gold in the coming weeks and into 2026. We'll see.
Yeah.
Awesome. Well, I think that wraps it up for this week. Any closing thoughts for you, Nick?
No, I think that does it for me.
Sounds good. Well, we'll be back next week. Everybody enjoy your Thanksgiving.